So this is the 7th day of auditing marathon, session 1. Again, in the afternoon, we will have one more session. So today, in this session, right now, our agenda is to discuss two important standards, SCA 320 and another standard is SCA 300. SCA 320 deals with materiality. SCA 320 deals with materiality. Whereas SCA 300 deals with planning, how to plan the audit. Now, both these standards are covered as part of 11th chapter which I gave. As part of the 11th chapter which I already gave. In the PDF which I'm using, 11th chapter. In that, 15th question and 16th question deals with materiality. Well, let us first focus on SCA 320. Materiality in planning and performance of an audit. Materiality in planning and performance of an audit. Materiality in planning and performance of an audit. This is one standard I can confidently tell you 100% of the students generally don't understand. They think they only know what is material. What is material only they understand. So what is materiality exactly? So the various terms are there. What is the relationship between materiality and audit risk? All the terms I'm going to explain. This one standard I'm going to explain you in detail. In one of the exams, they asked about performance materiality for 4 marks. In IPCC especially. And even at CF final also, performance materiality means what? This question has been asked and majority students couldn't write. Because very difficult to understand this definition of performance materiality. So this standard, first I'll give you a conceptual explanation. Then we will look at the material part also. We are going to discuss this standard in a detailed manner. Fine. So what is materiality? First, let us discuss in general term what is material. Material means significance. Material means significance. Material means importance, relative importance. In fact, the word material is a relative term. The word material is a relative term. It is not absolute term. It is a relative term, which means what is material for one organization may not be material for another organization. Example, rupees 1 lakh. Rupees 1 lakh is a very big amount for a very small startup. Whereas rupees 1 lakh is not even a small amount. It's not even a small amount. It's a very, very, very small amount for a company like Reliance Industries Limited, Tata Consultancy Services, so-called listed companies. So it's not the quantum alone. Sometimes, see, now I told you an example based on quantity. Materiality is not only quantitative characteristic. Materiality is not only quantitative. It is also qualitative. Sometimes materiality may be applied from qualitative angle, not from quantitative. Example, rupees 1 lakh for Reliance Industries Limited is immaterial for sure. But if 1 lakh rupees worth of fraud happened, suppose in books of accounts 1 lakh journal entry has been passed erroneously, wrongly, mistake, unintentionally. Okay, not a big deal, small amount. But if the same thing is passed intentionally, fraud, amount is same. If the amount of mistake is because of error, we ignored it because it is immaterial. But if the same amount is because of fraud, we don't ignore, because fraud is very, today it is 1 lakh, tomorrow it may be a very big amount. So qualitative angle also auditor has to look at. If a mistake is there, look at whether it is an error or fraud. Look at it is intentional or unintentional. If it is unintentional and the amount is also very small, ignore it. If it is intentional, though the amount is very small, though monetary wise it is immaterial, but quality wise it is not something I can ignore. I will take this as material, a very prestigious issue. So that's materiality meaning. I'm just talking about material. By the way, what is our objective of audit? The objective of audit is to obtain reasonable assurance whether financial statements are free from material misstatements. Even if you look at what is applicable financial reporting framework, it's a difference between amount classification, presentation, disclosure as per applicable, reported financial item versus amount classification, presentation, disclosure that is required as per applicable financial reporting framework. The difference is mistake. When do we worry about this mistake? We worry about the mistake when there is a material mistake, when it is material. So that is what materiality means. Now, how do auditors apply materiality in a real life audit? See, in real life audit, no, we will have three levels of materiality. Actually, if you look at the standard, it only speaks about two levels: overall materiality, and another level that standards talks about is performance materiality. Another thing which the standard talks about is, one is overall materiality, another one is performance materiality. The third one that we introduced in practical life is triviality level. Triviality level materiality. Triviality level materiality. So level 1 overall materiality, performance materiality, triviality materiality. There are three levels of materiality. Among these three levels, there is a clear-cut definition given for the definition performance materiality. There is a definition for performance materiality. And if you look at the definition, it is such a complicated sentence. In fact, I understood by looking at Big Four workings, in fact. Okay, so fine. What is performance materiality? Performance materiality. It is a materiality level. It is a materiality level. I'm writing the definition. Actually, if you look at the PDF material which I gave, in that performance materiality definition is there. But in that, there is another part which is there at here. That is missing. So I'm writing here in the notes, in the notebook I'm writing. You also please copy. Performance materiality means a materiality level fixed means nothing but determined. You can use more the word determined, in fact, which is more accurate. A materiality level determined by auditor at less than overall materiality for financial statements, where just a minute. First, I'm repeating, a materiality level determined by auditor at less than overall materiality for financials as a whole, comma, to reduce the probability of undetected and uncorrected misstatements. The probability of undetected uncorrected misstatements exceeds overall materiality level. This is the actual definition. A materiality level determined by the auditor at less than overall materiality to reduce the probability of undetected and uncorrected misstatements. Uncorrected and undetected. Actually, the phrase will be ulta. Uncorrected and undetected. First uncorrected should come, then undetected should come. I know what you're thinking of right now. So what are they? We never heard these terms. Don't worry, I'll clarify you. So the probability of uncorrected and undetected misstatements exceeds overall materiality level. And actually the definition is even more continuous. If applicable, the definition continues. If applicable, performance materiality may be a materiality level determined for all class of transactions and all class of balances. Okay, but anyhow, the second part of the definition is not that important. You can take it out. This is not that important. You can take it out. What is important is the first part, which I am now highlighting. If you observe, which I am now highlighting. Okay, so it's a materiality level determined by auditor at less than overall materiality for financials as a whole, so as to reduce the probability of uncorrected and undetected mistakes exceeds overall materiality level. Now, if you observe this this particular point, now you have so many doubts. So first of all, what is overall materiality? What is performance materiality? What is uncorrected mistakes? What is undetected mistakes? And you have used the word probability of, to reduce the probability of. There is another phrase, to reduce the probability of. What is that? So now we'll understand carefully one by one. One by one we'll understand carefully. Let us assume I am doing an audit of a company whose turnover is, let us assume, 500 crore. The turnover of this company is, let us assume, 500 crore. I am taking turnover as the criteria because for every company, what is the size of the company is represented by generally what? Turnover. So turnover I'm taking. This turnover, no, I call it as benchmark. I call it as a benchmark. Turnover is one benchmark. So the turnover is equal to 500 crore I'm taking. Listen carefully the concept. I'm explaining you not as a revision, but a very detailed concept I'm explaining you. Very detailed I'm explaining. So turnover is 500 crore. Let us assume what is my materiality. Now in this organization, when do I consider financial statements are materially misstated? When do I consider financial statements are materially misstated? Overall materiality is equal to, according to me, if the mistake crosses this overall materiality, straight away financials are heavily misstated, materially misstated. Now, overall materiality is equal to 1% of turnover, I thought. Okay, 1%. Anything which is more than 1% of turnover is very severe. Example, how much you will get here? 5 crore you will get. That is overall materiality. Now, how much is the performance materiality? Once you calculate overall materiality, you need to now determine what is performance materiality. You know, by the way, performance materiality will be determined based on various factors. First of all, it's a matter of professional judgment. It's a matter of judgment. See, this also, here also, I took 1%, you may take 0.5%. Somebody may take 1.25%. Somebody may take 2%. It depends upon the risk appetite of the auditor. So performance materiality is how much now? Overall materiality 5 crores, right? Let us assume I will fix 60%. Generally, as a corporate rule, performance materiality will be set between 50% to 90% of overall materiality. Generally, performance materiality will be set at what level? 50% to 90% of the overall materiality. So let us assume we are fixing at 60%. Let us assume we are fixing at 60%. 60% means what? 3 crore. What is performance materiality? 3 crore. Okay, sir, we understood what you said. How are we going to use? You said a definition, right? How do you link this with the definition? Don't worry. Now, there are two more terms in the definition which are used, right? Okay, keep this aside. This story, keep this aside. Okay, I'm going down. I hope everyone are with me. Kindly reply me in the chat box, everyone. Whoever is watching on YouTube also. Yes. Good. So next term. Now there are two more terms which I'm discussing. There are two more terms. Let us first understand individual the meanings. Now I told you how we arrive overall materiality, how we arrive performance materiality. I told you computation part. I told you. Okay. Now let us look at what is uncorrected misstatement. In fact, I'll write full sentences. Uncorrected misstatements. By the way, what do you mean by uncorrected? Means, suppose there are 10,000 vouchers. There are 10,000 vouchers whose value is 1000 crore. Let us assume, maybe take this as purchases. Take this as purchases. 10,000 vouchers are there for purchases. The total value of the purchase is 1000 crore. I have taken a sample of 100 vouchers whose value is almost 20 crore. I have just taken sample of 100 vouchers whose value not 20, or else I'll take 100. Generally, we take sampling in a very scientific method. So though we select less sample, the value will be bigger. Okay, so we just selected. So this is purchases population, and by the way, this I'm going to select is sample. So the sample number of vouchers I have selected is 100, and the sample vouchers I have selected no 100. The total value is 100 crore. Let us assume. Now, sorry. Now I have verified all these 100 vouchers. All these 100 vouchers I have verified. And once I verify 100 vouchers, now out of 100 vouchers, what I found is 2 vouchers are there where I found mistakes. Where I found the mistakes. So 2 mistakes I found. 2 vouchers are there where there are some mistakes. Now, what is the mistake value? Voucher number 1, where I found mistake. The mistake value is 2 lakhs. Voucher number 2, the mistake value is 3 lakhs. That's it. Out of 100 vouchers, I found 2 mistakes whose value is 5 lakhs. Whose value is 5 lakhs. Now, in 100 crore worth of sample I verified, which consists of 100 vouchers, I discovered a mistake amount of 5 lakhs. I discovered a mistake amount of 5 lakhs. Now, in 10,000 vouchers, in 1000 crore, how much would be the mistake value? What would be the mistake value? You know, in 100 crore, 5 lakhs is a mistake. In 1000 crore, what is the mistake? Or else I will say 50 lakhs. Let us assume the mistake value is 50 lakhs. Let us assume the mistake value is 50 lakhs in sample. And in 1000 crore, how much would be the mistake? In 100 crore, 50 lakhs, 1000 crore, 10 times. How much? 5 crore would be the mistake value. How much is the mistake value? 5 crore. Now you see, you know, in voucher 1 and voucher 2 together, I found the mistakes worth of 50 lakhs, right? This is called uncorrected misstatement. This is called uncorrected misstatement. What is uncorrected? I discovered 50 lakhs mistake. I discovered the mistake. Are these books of accounts rectified? Are financials rectified? Are the financials corrected? Not yet corrected. I just identified. I told management there is a mistake worth of 50 lakhs. I just identified. That is uncorrected. That is called as uncorrected. Now, based on this 50 lakhs, what am I doing? I'm extrapolating. What is it called as extrapolating? In sample, we also call it as projection. I need to project. Now, before I do projection, what I should do, before I do projection, what I should do, I need to look at why this mistake arises. What is the reason 50 lakhs worth of mistake is there? Mistakes, they can be classified into 2 types. Mistakes can be classified into 2 types, anomaly and non-anomaly. Anomaly and non-anomaly. Mistakes can be classified into 2 types. One is anomaly, another one is non-anomaly. So what are they? What do you mean by anomaly? Anomaly means something that is non-repetitive. Something that is non-repetitive. Something that is non-repetitive. It won't repeat at all. Non-anomaly. Non-anomaly means repetitive. That mistake is something repetitive. Suppose if a formula is used wrongly, wherever this formula applied, everywhere mistake will be there. Suppose accountant while typing 1 lakh accidentally entered 10 lakhs. It's a very rare mistake. Do you think this mistake happens every time? No, that's an anomaly. Suppose 50 lakh mistake. Now out of 50 lakhs, how the mistake came? 40 lakhs is anomaly. 40 lakhs is anomaly. What is 40 lakhs, sir? Actually, the transaction value is 4 lakhs only. But accountant wrongly entered it as 44 lakh. By mistake, he typed another 4 additionally. So the mistake is how much? 40. Tell me, can you say, okay, accountant 4 lakhs while he's typing, he typed 44. How many times it will repeat in a year? You can't. You can't project it because it is something non-repetitive in nature. Very rarely happens. Anomaly. And another 10 lakhs worth of mistake is there, right? Another 10 lakhs worth of mistake is there, right? That is non-anomaly. This mistake happened because there is a wrong calculation in formula, or there is a wrong there is something wrong in the process of the organization. This is something non-anomaly. And you know, in reality, when we are doing the audit, 99.99% of the cases, I can say, in fact, 100% of the mistakes that we identify, 100% of the mistakes that we identify, they are anomaly in nature. Anomaly is the word which is most practically, most of the mistakes that we identify are anomaly in nature. Non-anomaly is something which is extremely rare. But then I'm taking this example to make you understand what is non-anomaly. Now let us see. Now tell me, everyone in the chat box, which mistake I will use for projection. Which mistake I will use for projection? Do I use A, anomaly, or do I use NA, non-anomaly? Which mistake I will take into for projecting? Yeah, very good, excellent. Non-anomaly, very good, excellent. So non-anomaly is something I will take into account for projection. Now look at my sample size is 100 crore. The mistakes which I found is 50 lakh. In that mistake, anomaly is 40. This I will not consider in projection. Very good. Now, what is non-anomaly? 10 lakh. This is something which I will take into projection. In 10 lakh. In 100 crore, 10 lakh worth of mistake is there. So which means in total purchases value of 1000 crore, how much mistake would have been there? 1 crore. What is that? In 1000 crore, how much mistake would have been there? That is 1 crore. What is this value? 1 crore. This is non-anomalous projection. Non-anomalous projection. What is this called as? Non-anomalous projection. This is called as projected misstatement. This is called as projected misstatement. Already, what is the anomalous misstatement? 40 lakh. That is anomalous misstatement. 40 lakhs. What is anomalous misstatement? 40. What is projected misstatement? 1 crore. Now, in our example, what is uncorrected misstatement? What is uncorrected misstatement? 50 lakh is the mistake which I identified, not yet corrected. What is undetected misstatement? What is undetected misstatement? What is undetected? I said, right, projected misstatement is 1 lakh, right? 1 crore, right? Like I told you, in 100 crore, 10 lakh mistake is there. In 1000 crore, how much mistake will be there? 1 crore. That is what? Out of this 1 crore, already 10 lakhs is identified by me. Which means, what is the mistake that I have not detected? 90 lakh is something which I have not detected. 90 lakhs is something which I have not detected. Undetected. Undetected is 90. Actually speaking, 40 lakh is anomaly. 10 lakh is non-anomaly. We have projected 1 crore minus out of it 10 lakh is non-anomaly. Already we identified, no, sir, 90. You total this, 140 you'll get. Same here also, 140 lakh is the total mistake. Uncorrected plus undetected. Undetected means, what is undetected mistake? It's a projected mistake. What is it called as? It's a projected misstatement. Undetected misstatement is generally projected misstatement. Projected. Undetected, I have not identified. But how can you say it's a misstatement? I have not identified, but there is a possibility of 90 lakhs worth of mistake in the purchases because it's a projected value. It's an extrapolated value. I am not confident. This is not a factual data. This is not a fact. This is not a factual data. This is only a projection. Okay, now. So, okay, fine. First, you told me what is overall materiality. Then you explain what is performance materiality. Then you explain what is uncorrected mistake. Then you explain what is undetected mistake. Then somewhere you interlinked the concept of anomaly and non-anomaly. Somewhere you extrapolated nothing but projected something. But if you look at the definition of performance materiality once again, what the performance materiality definition says, performance materiality is a materiality level determined by auditor at less than overall materiality for financials as a whole to reduce the probability of uncorrected, undetected together crossing overall materiality will be low. The probability to reduce the probability of exceeding this overall materiality, that will be low. The probability is to reduce. So how to interlink? Now see, generally I told you undetected mistakes generally we don't find. So how we use now materiality concept? Again, overall materiality 5 crore in our example, performance materiality 3 crore. Now how I do in audit? Now you understood now what is projected, undetected, all that. Now let us look at how in reality in workings we apply this. So I fixed my team members, 5 crore is the overall materiality, 3 crores is the performance materiality. 5 crore is overall. If at all the mistakes that we are finding is exceeding 5 crore, no doubt we need to give a modified opinion, which may be qualified or adverse depending upon the pervasiveness. No doubt. But for performing the audit, we kept materiality conservatively at 3 crore. We are not saying, yeah, 5 crore is overall materiality. But for while performing the audit, I don't consider 5 crore. I consider lesser than that performance materiality, which is 3 crore. Sir, why are you giving a gap, sir, here? This is a space given. This is a space given for undetected mistakes. This is a space given for undetected. What does it mean? Though if the total mistake cross 5 crores only, it is material. Generally, if the total mistakes means projected value plus all total mistakes according to me in the financials, if it cross 5 crores only, I need to give qualified opinion. But I kept a materiality level of 3 crores conservatively. This is performance level. While performing the audit, I kept 3 crores as the level. If at all the mistakes exceeds 3 crore, I will no doubt qualify. I will not even go up to 5 crore. Why? If the mistakes that I identified cross 3 crore based on sample, the mistakes I calculated exceeded 3 crore. Based on sample, I have not even verified population. If I verify population, it will definitely go more than 5 crore. My sample itself crossed performance level. Obviously, when I verify population, it will cross overall materiality level. Obviously, it will cross overall materiality level. With that logic, what I did, though overall materiality is 5 crore, I kept performance materiality at 3 crore. Now, what we did in our example, projected, we did no uncorrected misstatement, undetected misstatement. Both together in our example, we got how much? 140. This is 40 lakh. This is 90. Sorry. Yeah, uncorrected is 50, then 90, 140. Whereas performance materiality level is 3 crore. Since the uncorrected misstatement and undetected misstatement are less than 3 crore, here I don't worry. I will give unqualified opinion. Suppose, what if my performance materiality is 1 crore and my overall materiality is 2 crore? What if my performance materiality is 1 crore and overall materiality is 2 crore? What if it is the reason? Okay, my uncorrected and undetected, exceeding performance, of course it is less than overall, but I don't take risk. I will straight away give modified opinion in this case. If undetected mistake exceeds performance materiality, I will straight away give a modified opinion. Now, one more doubt I have. Sir, overall materiality, you said in our example 5 crore. And in our example, performance materiality is 3 crore, you said, sir. Why auditor has kept this much gap, sir? Suppose overall materiality is 5 crore, performance materiality is 4.5 crore. Overall materiality is 5 crore, performance materiality is 4 crore. 3 cases. Let us interpret these 3 cases. Overall materiality is same. If you observe, only the performance materiality is different. Now, every one of you have to tell me, this is a space which I kept for margin. Margin for undetected misstatement. Margin for undetected mistake means what? See, I am doing audit based on sample. Based on sample, I know mistakes I will find. But the item of population which I did not verify, the item of population, in that also mistakes are possible, right? Yes or no? So if at all, see, suppose if 5 crore I relate to my sample, no, that's not correct. 5 crore is relating to population. So with respect to my sample, I need to keep some other level, not overall level. So when I'm doing audit of sample, no, when I'm doing sample, no, uncorrected mistakes I found. Let us assume my uncorrected mistake is 2 crore. I will compare with performance level. Okay, since it is within that, even if at all some mistakes which I have not identified also, it's okay, fine. I'm okay with it. Suppose if the mistakes which I identified, if it crossed performance materiality, then I can say mistakes which I have not identified, plus mistakes which I have identified, both together will be more than 5 crore. Fine. If you observe again, let us interpret these three cases. Now, here performance materiality 3 crore, here performance materiality 4.5, here it is 4. Actually, if you see here 60% of overall level, 90% of the overall materiality, 80% of the overall materiality. Performance materiality, here I kept 60%, here I kept 90%, here I kept 80%. Now, what is my risk appetite here? What is my risk? See, case 1, I kept performance materiality of 60%. In company 2, I kept 90%. In company 3, I kept 80%. What do you think? In which of these cases my risk is very high? In which of these companies, company 1, company 2, company 3, my risk is very high, and because of which I kept that level? Only one student have answered option A, company 1, they said. So in which of these cases you think I am having higher risk? You are thinking I am having higher risk. Again, mixed answers I'm getting. The answer is option A. Company 1, the risk is very high. If you look at company 2, no, the gap I am giving is very less. Which means margin I gave. The margin I gave for undetected mistakes is very less. Which means, what is my perception here? In this organization, the possibility of undetected mistakes, the possibility of mistakes in unverified sample, in unverified population, unaudited population, the margin of undetected mistakes in unaudited population, the chance is very low, which means risk is very low. So I kept high performance materiality. I felt risk is very low. The possibility of mistakes in unaudited means undetected. The possibility is very low. That's why I kept performance materiality as very high. Possibility of mistakes is low means risk is low. Because the risk is low, I kept high performance materiality. Sir, how do you know risk is low, sir? I looked at internal control system. I saw risk assessment. I did risk assessment process. I thoroughly observed the entity and its environment. I saw governance process. I verified control environment. I looked at control activities. Everything is very robust. Internal audit is robust. Audit committee is very dynamic. They're very prompt. Moreover, the entity's ethical values and organization values are very extremely good. So there I felt the possibility of mistakes in unaudited is very low. In fact, while conducting audit, not even a single mistake I found. Even a single small error also I did not found. So I kept performance materiality at 4.5 crore. Whereas in case of company 1, I kept 3 crores. The margin I gave between overall materiality, performance materiality is very high. In all these 3 cases, this is very high. Means I am giving high margin percentage for undetected mistakes. I am giving high margin. which means here I felt risk is very high. Here I felt risk is very high. And that is the reason why performance materiality is reduced. Since I have high audit risk, I am reducing performance materiality. Now you observed, based on this example, you would have observed what is the relationship. What is the relationship between audit risk, nothing but risk, and performance materiality, nothing but materiality? What is the relationship between risk and materiality? Everyone, please reply me. Option A, direct relationship. Option B, inverse relationship. What is the relationship between materiality and audit risk? What is the relationship between materiality and audit risk? Kindly reply me in the chat box. Yes, very good. It's inverse relationship. It is nothing but inverse relationship. Wherever I think the possibility of undetected mistakes is high, nothing but risk is high, I am keeping performance materiality very low, very far away from overall materiality, very far away from overall materiality. Wherever I think possibility of undetected, by the way, tell me, undetected mistakes will be in which part of the population? Unaudited part. Unaudited. You have not audited, so only you have not detected. That's why you're saying undetected mistake in unaudited population. Now you would have understood the relationship between materiality and audit risk is inverse relationship. The relationship is inverse. Now again, so again, it's not yet over. Still so much of topic is there. So much is there to discuss. Overall materiality 5 crore. Performance materiality 3 crore in our example. Then triviality materiality. Let us assume 1 lakh. 1 lakh. So what is this triviality materiality level? This is for my team, engagement team. Example, I'm just giving you a hypothetical. I'm just giving you a artificial example to make you understand. Suppose I fixed materialities like this and I sent my article assistants for conducting audit. And whenever they find a mistake less than 3 crore, they're ignoring. Sir, it is less than 3 crore, sir. Less than material, sir. So ignoring. You should not ignore straight away. See, sometimes, my article assistants, what is the mistake? If I saw his workings, he found mistake 1, some 14 lakhs. He ignored it because it is less than 3 crore. He found mistake 2, which is 89 lakhs. He ignored it because it is less than 3 crore. Mistake 3, some 94 lakhs. He ignored. Mistake 4, 2 crore. That also he ignored because it is less than 3 crore. But what I told him is, though individually they are less than 3 crore, though individually they are not material, but you total it, it is more than 3 crore. Yes or no? Yes. So materiality concept is not only applied individually on each mistake, it is aggregate also. You will have to apply individually. It may not be material, but aggregate of all other, it is material. So I told my team member, look, don't ignore just because it is less than 3 crore. Write each and every mistake that you are finding. Now what my team member write, mistake 1, 14 lakh, mistake 2, 89 lakh, mistake 3, 100 rupees, mistake 4, 45 rupees, mistake 5, 9 rupees, mistake 6, 1 crore. I looked at it, I am okay with all this. What is this 100 rupee, 40 rupee, 9 rupee mistakes? Who asked you to write even small mistakes? No, sir, first you said less than 3 crore. If I ignore, you are saying you have to consider. Now again, these are also mistakes only, they are also less than 3 crore, no, but you said me to write at a separate place, no, but why are you now saying they're not correct? Okay. So see, apply materiality logically. Less than 3 crore you have to write, but doesn't mean each and every small item also have to write. So sir, do one thing, you fix me another level. Okay, I'll fix triviality level, which is 1 lakh. So what is that I'm saying here? My dear article, if you find a mistake more than 1 lakh only, you write aside, keep it aside. If you're finding a mistake which is less than 1 lakh, how many ever number of mistakes you find, ignore. Don't worry, I'm not bothered about it. If you're finding mistake more than 1 lakh, keep it aside, a list. And we will total it. We will total these uncorrected mistakes. Uncorrected means why? Why I'm using the word uncorrected? Because I identified them, not yet rectified in the financials books. So uncorrected. If this uncorrected misstatements, based on this uncorrected misstatements, we will do projection. When we do projection, after interpreting, is it anomaly or non-anomaly? Extrapolation. Then we will get undetected misstatement value. Now, based on that, we will interpret the results. We will interpret the results. So now once again, look at the definition of performance materiality. So I hope now you understood the concept of triviality level also. Now again, once again, I will write the definition of performance materiality. Then we'll link up whatever we understood with the definition. Performance materiality is a materiality level determined by auditor. It's a materiality level determined by auditor. It's a materiality level determined by auditor at less than overall materiality for financial statements as a whole, in order to reduce to a low level, the probability, what they want to reduce, the probability of uncorrected plus undetected misstatements exceeding, nothing but exceeding overall materiality level. Performance materiality is a materiality determined by auditor at a level which is less than overall materiality for financials, in order to reduce to a low level the probability of uncorrected, undetected exceeding overall materiality. We want to fix performance materiality at what level? The probability that uncorrected, undetected together exceeds overall materiality, that should be low. That should be as much as possible at low level. So in such a way, you fix performance materiality. Suppose I found projected misstatement. PMS means projected mistakes I found. If it is coming to 3.8 crore projected mistake is what, like I told you, let me calculate projected plus AMS, anomalous misstatement plus projected misstatement. In the concept of materiality, uncorrected misstatement plus undetected misstatement, they both are same. Anomalous misstatement plus projected misstatement, uncorrected misstatement and undetected, it is coming to 3.8 crore. Let us assume based on the audit, it's coming to 3.8 crore. 5 crore I kept overall materiality. Performance materiality I kept 4 crore. Getting it? Performance materiality I kept, let us assume 3 crore. Now the projected value is 3.8, right? The total mistake. Is it exceeding overall materiality? No, it is not exceeding overall materiality. It is not exceeding overall materiality. In such a way, the performance materiality has to be kept. Like, in other words, what are they saying? If the risk is high, keep performance materiality low. If the risk is low, keep performance materiality high. Again, here I'm telling you, there is a counter argument. I'll give you one more. Suppose, let us assume overall materiality is 5 crore, performance materiality is 3 crore. I calculated projection, all that together. My uncorrected plus undetected misstatement came 4 crore. Let us assume it is 4 crore. What should I do? I should take extra sample. I should take extra sample and verify the extra sample, identify whether uncorrected mistakes are there in this extra sample also. Identify. Again calculate revised value. Again calculate revised uncorrected plus undetected values. Again calculate revised uncorrected undetected values. But generally, what I'm saying you, undetected values generally won't be there. Though the definition uses the word undetected mistakes, projection concept is extremely difficult. Overall mistakes, performance level. Suppose performance level 3 crore. I found a mistake, no? If the mistake is more than 3 crore, no. If the mistake is more than 3 crore, it is exceeding 3 crore, right? Immediately what will I do? I will give modified opinion. Why I will give modified opinion? In the sample itself I found 3 crore. What about unaudited item? It will be definitely more than 5 crore. Now I discovered 3 crore worth of mistake, right? More than 3 crore worth of mistake, right? Because my performance materiality is more than 3 crore. Because my performance materiality is 3 crore. When I find a mistake more than 3 crore, I'm easily saying Undetected mistake, total mistake is more than 5 crore. I'm easily saying. Suppose if I keep performance materiality at 4 crore and I found a mistake of 3.2 crore, since it is less than performance materiality, I am not worried. Suppose if the performance materiality is 3 crore and I discovered 3.2 crore mistake, again I'm confusion started. In such way, you should fix performance materiality. So that's what the standard actually says. So the performance materiality shall be fixed in a way. One more meaning. Performance materiality also has another meaning, tolerable misstatement. Performance materiality is also having another meaning, tolerable misstatement. This word tolerable misstatement is used in SA 530 context. Performance materiality used in SA 320 context. So tolerable misstatement, performance materiality, both are same. Tolerable misstatement means what? In our example, performance materiality 3 crore. If the mistakes that you have identified is within 3 crore, tolerable. Yeah, I can tolerate, no problem. If the mistakes are more than 3 crore, now look at interpret by using the word tolerable misstatement, you will understand more clarity. If the mistake value is more than 3 crore, it crosses my tolerable level. It crosses my tolerable level. That means the chances of total mistakes in entire population will be more than overall materiality, where I will definitely have to give a modified opinion. So we must make sure the mistakes crossing tolerable level, the possibility should be low. If the mistakes possibility crossing tolerable level, the possibility is low, obviously overall materiality level is also low. So that's how the concept is interpreted. That's how it is interpreted. Tolerable level. And in sampling SA 530, they make certain statements. You will shock, if you look at the statements. If the total mistake, nothing but anomalous mistake and projected misstatement, if they are becoming closer to tolerable misstatement, if they are becoming closer or if they are exceeding tolerable misstatement, the auditor may consider the sample he has selected is not correct. The sample he has verified is not adequate. The sample he has selected is non-representative. That's a precautionary measure. So dear Mr. Auditor, whenever you identify uncorrected misstatement, no. If it is more than tolerable misstatement, no. Directly don't conclude. Take one more step ahead. Do additional work. Now try to identify revised uncorrected. Is it now exceeding tolerable? No, it won't, generally. So it's a very lengthy topic. It's a very complicated topic. Still, I tried my best to make you understand the definition. Okay. So simple. Performance materiality should be kept at that level where we project no mistakes, uncorrected, undetected. When we project no, it should not exceed overall level. In such a way, performance level should be fixed. In fact, if you ask me a tiebreaker rule, how I apply in reality, so that you can crystal clear understand the concept. Overall materiality, performance materiality, undetected, uncorrected. I will completely ignore the topic of undetected. I will completely ignore the topic of undetected. I will keep performance materiality at 3 crore because somewhere I believe the mistakes which I am identifying in sample, these mistakes are less than 3 crore for sure, less than performance materiality. I know that's the reason I kept performance materiality at 3 crores. If the mistakes which I am going to identify in sample is less than 3 crore, total mistakes possibility will be less than overall materiality, which will be 5 crore. Suppose if I think the mistakes that is possible in sample, is 3.2 crore. No, the mistakes that is possible in sample is 3.2 crore. No, I will not keep performance materiality 3. I will keep performance materiality 4. I will keep performance materiality at 4 crores. And when will I do projection? All that, suppose if the mistakes I identified, is more than performance materiality, if it exceeds performance materiality, nobody can save that company. I will now apply projection concept. When I calculate the projected value, if it is exceeding overall materiality, I will take a modified opinion call. Simple. So performance materiality, I will only consider for uncorrected mistakes. I will not apply the concept of undetected in reality. When will I apply the concept of undetected misstatements in reality? When my actual mistake is getting closer to performance level. When the actual mistake is getting closer to performance level, automatically, what about undetected mistake? That and plus uncorrected, both together would have already exceeded overall level. If at all the actual mistake is closure to performance materiality, getting closure or crossing, I will do one more work. I will take additional sample. Again, I will try to identify mistakes. If there are no mistakes, I'm happy. If there are again mistakes, I will take another third set of sample. Again mistakes. Now I can concretely say after 3 layers of verification, after 3 additional verifications, I can now concretely say financial statements as a whole are materially misstated beyond overall materiality level, which requires a modified opinion. And I will request management to rectify the mistakes. If they don't rectify the mistakes, I will give modified, which may be qualified or which may be adverse. Look at the last 5 minutes, which is most important. Whatever in the past 5-10 minutes I told, this is tiebreaker rule, simply to make you understand the entire concept of uncorrected, undetected, tolerable, performance materiality, overall materiality, anomaly, non-anomaly. So many I have integrated here. Now let's look at the theory. But theory is not as what we discussed example. It is not as complicated as such. What is materiality? Write about materiality fixation using benchmarks. Materiality is an important consideration to evaluate whether financials are free from material mistakes. A misstatement is considered as material when we consider a mistake is material if it influences decision making process. Materiality level may change. Of course, it may change as audit is progressing. When the risk is increasing, if I think the risk is very high, I will reduce performance materiality. If I think risk is very low, I can increase the performance materiality. So the materiality fixed at the time of planning may be different from materiality fixed at the time of performance of the audit. See, this video is again telecasting on YouTube, right? You write the definition of performance materiality later after watching that video once again, once I complete the class. Okay, see here I gave a wrong sentence. Pervasive level, it's not pervasive level. This you take off. Please, all of you, please make a note. This you take off. Materiality for financials as a whole. When do we consider financial statements as a whole or materially misstated? As a whole. Suppose in a company where 500 crore turnover is there, 1% means 5 crore. If the mistake is more than 5 crore, I assume financials are materially misstated as whole. Suppose if it is more than 20 crore, I assume pervasive. Generally, overall materiality multiplied by 3 or 4 times pervasive level will come generally. Now, if you observe, how did I calculated materiality? How I fixed materiality in our example? Overall materiality I calculated as 1% of turnover rate. How did I fix? I applied a percentage on some chosen benchmark. I choose a turnover as a benchmark. You may choose different benchmark. Okay, you may choose net asset value as a benchmark. You may choose current working capital as the benchmark. You may choose reserves and surplus plus equity as a benchmark. You may choose borrowings as a benchmark. You may choose turnover as a benchmark. You may choose profit before tax, profit after tax as a benchmark. Anything you can do, you can choose as a benchmark. According to you, which particular parameter, we also call it as metrics. According to you, which metric will better represent this organization? That metric you can take. See, for service industry, turnover is not a better metric. Profit is a better metric. In manufacturing industry, how much they produced may be a better metric. In a banking industry, how much loans they gave is a better metric. In an NBFC industry, how much investment they got. In a startup, investment they got. So metrics, benchmarks will be different for different companies. So what is the most suitable benchmark for a particular organization? Take that benchmark. Generally, net profit, turnover, it may be profit or loss. These are generally accepted benchmarks. So the auditor shall apply appropriate percentage on selected benchmark for determining materiality level. So that's it. Now, from where you will get the benchmarks? So you said benchmarks. From where you will take your current year figures, so last year figure. You wish. You may take it from last year. You may take it from latest quarterly results, or you may take it from budgets. You may take it from current year financials itself. What are the benchmarks, sir? You can take PBT, turnover, gross profit, total expenses, net worth or net asset value, working capital, whatever. How do I know, sir, which benchmark is suitable, which benchmark is correct for an organization? How do I know? It's a judgmental issue. However, there are some factors. What are the elements of assets, liabilities, income, expenses? Look at the assets nature, liabilities nature, all that. For every organization, the nature of assets are different. Nature of liabilities are different. Is there any indication in applicable financial reporting framework? Is there any clue in the framework? Suppose you look at Schedule 3, it says 0.5% of turnover is material. Entities, capital structure, who invested in this company, what is the capital structure, ownership structure, government company, a different benchmark. What is the information need of majority of the users? So in generally in IT companies, number of employees is one big benchmark. Employee cost is a big benchmark. In IT industry, people expect how many employees are there working. An IT company growth is decided based on recruitments. You know that. And is there any indication in law or regulation? So based on law or regulation also you can take, suppose Telecom Regulatory Authority of India, telecom companies, you can take AGRDU as a benchmark. Adjusted gross revenue in telecom companies. Sir, what is adjusted gross revenue? No need. I'm just giving an example. That explanation is not required. That's it. So with this, the concept of materiality discussion is completed. Now we are discussing what is revision of materiality. I told you as we are progressing in audit, we may revise. When we think the risk is high, we reduce performance materiality at a lower level. When we think the risk is low, we increase the materiality. So the relationship between materiality and audit risk is inverse relationship. So the overall materiality and performance materiality may need to be changed because of circumstances, because of additional information, or because actual result and anticipated results are different, because of increase in risk, or a change in auditor's knowledge of client business. And what are all you have to document, sir? As per SA 320, I need to document materiality overall level, and I need to document performance materialities. I need to document general performance materiality and any revision of the above and reasons thereof. Why I revise, reasons also I should document. So with this, I have successfully completed what is materiality concept. Especially the crux in the definition is very, very logical. If you see, the reading is hardly 5 minutes it took, but the discussion is more than 1 hour we spent. If you observe, I don't know how many of you have previously understood the topic of materiality at this depth level, but this is what expectation of the ICAI or expectation of the subject called auditing from you. This is what this is the level at which your command on the subject should be. The reason why I took this topic in a detailed manner is very simple. I want to make you understand how in-depth the auditing subject is. Today, nowadays, students are unable to qualify in auditing subject, and they think reading number of times gives them better clarity. No, it's not a number of times you read. I don't know how many of you have read materiality topic earlier number of times. I don't know. It's not about number of times. It's about the depth of understanding. If you understand the subject in depth, if you analyze it correctly, you need not remember. Never try to remember the subject. Understand, try to analyze, try to conceptualize. That's how remembrance is a byproduct. You cannot try for remembering the subject. If you try for remembering, I'm telling you, you're doing mistake. That's it. So I hope every one of you are confident. So right now I'll stop the streaming. Again, I will resume the session in the afternoon at 3 o'clock. Okay. So this is regarding materiality. So in the evening class, we will discuss about planning chapter. Okay. Planning chapter we'll discuss. Carry on.